Welcome to the Roy Morgan Weekly Update. Once again, the polls were wrong in the US, underestimating the Trump vote as they did in 2016 and again in 2020. A big week of international news with Donald Trump being re-elected as US President, but so far this has had only a minimal impact on the key weekly indicators in Australia. The Coalition on 50.5%, down 0.5%, still has a narrow lead over the ALP on 49.5% on a two-party preferred basis. If a federal election were held now, the result would be too close to call. Either major party would require the support of minor parties and independents to form government, according to the latest Roy Morgan survey. Government confidence, whether the people think the country's going in the right direction or the wrong direction, dropped 3.5 points to 74, well below the neutral level of 100. This is because an increasing majority of Australians say the country's going in the wrong direction. That's 56%, up 2% in a week. Only 30% of Australians say the country's going in the right direction. Now, this was a factor in the US election, so we'll be keeping an eye on this metric. Consumer confidence, ANZ Roy Morgan Consumer Confidence, was unchanged for a third straight week at 86.7. You might recall Trump asking the simple question. He said, "Are you and your family better off now than you were 4 years ago?" Well, each week, Roy Morgan asks, would you say you and your family are better off financially or worse off than you were at this time last year? Today, many more Australians say worse, 48%, than better, 22%. And we've been in this negative territory since January 2022. There were, however, some positive signs. So consumer confidence has now spent 4 weeks above 85 for the first time since January 2023. In addition, there was positive movement in the important question on buying major household items. Now 26%, up 4% of Australians, say now is a good time to buy major household items. That's the highest figure for this indicator for well over 18 months, since Jan 2023. The improvement in buying sentiment is a good sign for retailers as we head into the most important retailing period of the year, the pre-Christmas and Black Friday sales period. You'll have noticed Christmas decorations and items already appearing in the shops over the last week. Now, the other big news was, of course, the Reserve Bank's decision to leave interest rates unchanged, despite official inflation dropping to 2.8% for September, within the Reserve Bank's target range. The Reserve Bank justified leaving interest rates unchanged by warning that core inflation, what they call the trimmed mean, remains above the target range. Inflation expectations increased to their highest for over a month. ANZ Roy Morgan inflation expectations were up 0.3% to 4.9%. So that means Australians are now expecting annual inflation to be 4.9% over the next 2 years. Given Trump's win in the US and concerns about the impact that might have on inflation, it may be that the window of opportunity to reduce interest rates is gone for the moment. And now, Australian business confidence. Remember, Roy Morgan measures business confidence monthly, and in October, it jumped 12.4 points to 106.7, over that magical 100. And it's the highest it's been for well over 2 years, since April 2022, just before the last federal election. We interview around 1,500 businesses each month to gauge their views on their company's prospects, as well as their assessment of the broader Australian economy. And in October, businesses grew more confident about investing in their own business and about prospects for the economy going forward. Now, 42.9%, up 6.9% of all businesses say the next 12 months is a good time to invest in growing the business. and a large majority, 59%, up 6.8%, expect good times for the Australian economy over the next year. That's the highest figure for this indicator since Feb 2022. These were the two largest positive moves in sentiment for business confidence, but the good news is that all 5 indicators moved in a positive direction in October. This is very good news for the business sector and even the economy as a whole. Over the last 2 months of September and October, the most confident industries were public administration and defence, with a business confidence rating of 160.1, followed by education and training on 127.3, and finance and insurance on 121.6. At the other end of the scale, transport, postal and warehousing has the lowest business confidence at only 72.6, just below mining on 78.3 and agriculture on 85.7. Now to employment and unemployment. Real unemployment in October is 9.2%, down 0.3% on a month. So an estimated 1.45 million Australians are unemployed, looking for work. There are a similar number of Australians underemployed, working part-time but wanting more hours. So now 1.48 million Australians are underemployed, equivalent to 9.4% of the workforce in October. Overall then, total unemployment and underemployment, what we might call workforce underutilisation, was 18.6% of the workforce. Over 2.9 million people, virtually unchanged on a month ago, and stable over the last 3 months. And finally today, a quick look at the US presidential election shows something Australian pollsters need to understand. The US exit polls for the 3rd US presidential election in a row showed Donald Trump winning the votes of white women. However, most, if not all, the pre-election polls showed Democratic candidate Kamala Harris had a significant lead amongst women. This disconnect is a really big part of the reason why pre-election polls were wrong and didn't predict a clear win for President Trump. And that's a wrap. Thanks for viewing Roy Morgan's latest results this week, and I'll be back next week to bring you the most up-to-date readings on consumer confidence, inflation expectation, and voting intentions in Australia. Thank you for listening.